Hello and welcome back, everyone. Thank you for joining us again for a fireside chat in the context of my corporate venture discussions. It is my pleasure to welcome Rudolf to this conversation. He is the head of investment for 574 Invest, which is the corporate venture capital arm of SNCF, which is the France's national state-owned rail company, obviously responsible for the TGV, which many of us have enjoyed whilst traveling in France, and France's high-speed rail network. Lucas, thank you very much for making time and welcome.
Well, first of all, thank you, Claudia, for the invitation. It's always a pleasure to discuss about corporate venture and to reconnect with the school. Maybe just a few words about myself. So I worked as a banker for 10 years in London and in Paris, then did an EMB at INSEAD and joined shortly afterward the merger and acquisition team at SNCF. And since 2019, I'm the head of investment at 574 Invest. And just for clarity, 574 is the top speed of the TGV, so the record of the TGV.
So no pressure on the CVC, right, to try to break the record of the fastest train in France. So thanks again for joining. Always a pleasure to have an alumnus back in class. Lucas, looking back of your experience at SNCF and in corporate venturing in general, if I would give you 1 minute to talk a little bit about the good, the bad, and the ugly of corporate venturing, looking back at your experience, what would it be?
A good question, thank you. Now, for me personally, I would say the good is clearly to create something new within a large organization is a very exciting project, and in particular on such a topic. The launch of the corporate venture is the result of a long process initiated almost 10 years ago when the group started to engage with startups. So clearly a great challenge and a great personal one. It's been a pleasure to work on this project. For the bad, I would say learning how to say no 99% of the time. It may sound easy, but it's not, especially at the beginning. And for the ugly, I would say it's yet to be seen, fortunately, but it's probably when we'll make our first loss and I will need to inform our CFO.
Okay, we'll do that again in 5 years' time, and you can tell us about it then. So, but let's start off maybe with a little bit of background about SNCF, because it's a very prominent, it's a very established parent company, and obviously understanding the context within which the CVC operates is important.
Sure. So as you mentioned, SNCF is a state-owned public service company whose mission is to deliver door-to-door sustainable mobility services. So we moved obviously people, but we also move goods. And just a few figures to put things into context, it's more than 30 billion euro turnover. 1/3 is being realized outside of France, and it's more than 250,000 employees worldwide. So it's clearly a very large organization. But maybe more importantly for startups, it's a huge and a fantastic playground. We have the chance to own many different kind of assets. Just to give you a few examples, we operate more than 30,000 kilometers of rails. It's more than 20,000 trains on a normal day. And we have more than 3,000 train stations, warehouses, I mean, you name it, we have many assets. So it creates loads of opportunities for startups to engage with the group. And actually, we have more than 400 startups currently working with us. So it is very important to have those assets for us. And in terms of organization, we have 11 main activities within the group. And so we have the freight business, a rail business, obviously, innovation, real estate. I'm mentioning this because we really wanted the corporate venture to serve the activities, the priorities of the 11 activities and not just one. And that's why the fund is directly attached to the parent company, SNCF SA.
Okay, very interesting. So obviously a lot of opportunities for startups to engage with this very diverse and multi-business corporate parent. Now, Tell me about this engagement of SNCF with startups, and maybe, I mean, you mentioned early on it started about 10 years ago. So tell us a little bit about progress over the last decade.
Yeah, so we started almost 10 years ago, and it's probably only the beginning. But the first step we did, it was to invest as an LP, a limited partner, into a multi-corporate fund called Eco-Mobility Venture. We invested along other corporates with interest in the mobility sector. And at the time, we had three main objectives in mind. The first one was to get to know the VC ecosystem. So I would say to gain some market knowledge. The second objective was to be closer to the deal flow, get to know the deal structuring, the valuations. So really to gain some technical skills. And the third objective also to have a place where we could exchange with other corporates about innovation and investment. So I would say to expand our network. So that was the first step. The second step happened in 2015 when we launched SNCF Digital Venture. It's a fund, but it's managed by an external team, and we are the sole LP. And we felt that we wanted to have more decision power than in traditional multi-corporate funds. So we launched a public tender, and we chose one VC firm. And it's really a hybrid model because the investment and the analysis is ultimately made by an external team, but the SNCF group is already is obviously closer to the startups, can influence the deal flow, and we have a seat at the investment committee. So a very interesting step as well. And the third step happened 2 years ago in 2019, when the group decided to have its own investment team, its own fund. The main rationale for that was that we felt that after 6 or 7 years of indirect investment into funds, that the level of interactions between the business unit of the group and the startups could still be improved. So we launched the fund officially in May 2019 with three main objectives in mind. First objective was to have all those indirect investment under one roof to give more clarity and to accelerate innovation. The second objective was obviously to have the capability to invest directly in startups, which serve directly the objectives and the priorities of the group. And the third objective was also to have the ability to finance entrepreneurial projects. We felt it was the right time for the group to do it and to finance SNCF projects from employees. So sorry, it was a long answer, but as a reminder, so first step, we choose a multi-corporate fund. Second step, we act as a sole LP into a fund, and now we are doing direct investments.
But it shows a little bit also the progression. And also, I think for yourself, it was a bit of a progression because you started originally in the M&A team. Is that correct, if I remember correctly?
Yeah, I did. This is correct, yeah. So, yeah, we took our time. We wanted to do this right. Obviously, VC investments are by nature a risky adventure. And we wanted to be mature enough to do it directly.
Okay. So tell us a little bit about the mandate of 574 Invest Now, the CVC.
Sure. It's quite simple. I mean, we obviously want to be the main point of contact when it comes to direct investment in startups, minority investments. Majority investments is still made by the M&A team, but when it's a minority investment, it's for us. And the second objective also clearly to accelerate innovation within the group. So that's why when it comes to direct investments, we only invest in startups which already works with the groups. We really wanted to have a connection between the startups in which we invest and the SNCF group. That's very important for us. Obviously, financial returns is a key criteria for us, but we also wanted to have some, I would say, operational return for the corporates. So when we go to the investment committee, we need both. So the financial team, investment teams that I will represent needs to approve the transaction, but we also need an internal sponsor from one of the business units who also wants to go with the investment.
Okay. So the engagement with those business units, So you mentioned investment plus business development team. So clearly both of them have a say in the ultimate decision on whether to go with a startup or not. Maybe tell us a little bit about how you manage that, the internal engagement, because as you mentioned before, SNCF is a large corporate. So they are with 11 distinct businesses under its umbrella. So how do you manage it?
It's a very good question. It's actually probably one of the key differentiation with other CVCs. Day one, we really wanted to have the financial or an investment team and a business development team. So that's how we managed it. Finding the right person at the right time within the right business unit is clearly a huge challenge. It's a full-time job. And we were lucky enough to have someone in the team who has been with the group for more than 15 years. He worked in different entities, and he can really facilitate those relationships between the group and the startup. So for us, it was key to have day one within the fund, I would say 2 teams, so one doing investment and one only business development.
So finding that champion that really understood the corporate parent and the business units deeply was kind of key.
Absolutely. Someone also with a taste for innovation. It was a key thing for us.
So looking back, if you look over the last couple of years, what was or maybe still is important to facilitate the success basically of CVC and maybe the interaction with the corporate parent?
Yeah, for us, I think it was to have the right organization in place. I mentioned that so we have an internal business development team, but we also put in place a committee. It's called a comité d'orientation. I like to refer it as our LP meetings. And basically, it's a meeting where we will have the 11 activities of the group. We have one representative who is typically a key decision maker who also has a taste for innovation. And we meet every 6 weeks with all of them for 2 hours. Basically, we'll be first discussing about the deal flow, the latest news in the VC market. Then we'll have an external speaker. It could be a VC or startups. And then we'll be finishing having more internal discussions, obviously, about their priorities, their innovation projects, what are the main pain points. So really to have to engage with them on their day-to-day almost routine. So it's been very important for us to have these connections also with the activities. And it's been so almost 2 years now, and we are very pleased with the result and the level of engagement from those members.
So 11 business units, senior members meeting every 6 weeks with your team to learn about what you have done, the kind of deal flow that you are seeing. And obviously, this is a chance for you also to hear from them potentially what kind of needs they have.
Exactly, a lot. I mean, we also exactly receive a lot of information from them. We try to understand exactly what they are looking for. Now, this feedback is key for us, and we really pleased with the actual results. It's very important for us.
And I guess it's early days. You mentioned for the last 2 years, but if you would have to venture a guess, do they enjoy themselves?
Well, yeah, I mean, the level of attendance is quite high, so it's even very high. So it's for us, it's clearly showing that they see a lot of benefits also in those meetings. So we are now ready for a full new year in 2021, and actually we are having a committee d'orientation next week, and that we are already preparing now.
Very interesting. So, I mean, let's talk a little bit about intrapreneurship. How do innovation inside, or innovators potentially inside the business units interact with the CVC, with your team?
Yeah, so thank you. It's the innovation remains at each activity or business unit levels. We are not at the CVC doing innovation as such, but obviously we are trying to accelerate the innovation within the group as much as we can. And one of the way we find it useful was also to accelerate entrepreneurial projects. So it's typically a project that an employee from the group will develop on its own time. And they can reach out to us when they reach a certain level of maturity. So for us, it's typically when they start having a business plan, they have almost a team in place, they know more or less how they want to monetize their ideas. They can come to us and we can finance part of the project. And we felt with the launch of the corporate venture, it was the right time also to add this service for SNCF employees.
Okay, very interesting. So clearly, so there's on the one hand, your team looking outward, trying to bring in startups to engage basically with the different business units at SNCF, but also engaging with those intrapreneurs that maybe in any of the business units and maybe having their own ideas, but may need to have a sounding board to approach you. Very interesting. Now, obviously, this we're having this conversation in the context of discussions that we're having at INSEAD with corporates that are just at the starting point. They're maybe just at the point where SNCF was 10 years ago. What would you like them to know? What would be some of the important points or some of the lessons learned that you would share with someone, with a senior executive or a board member that comes to you and says, we would like to be where SNCF is, or we would like to start the journey towards corporate venturing? What do you think is important for them to hear?
I would say to have a clear mandate is key. You mentioned it. Every corporate has its own history. Some of them wants to do only indirect investments or invest into funds. Some only want to do the direct to make investments directly. We choose more a hybrid model, I would say, because for us it's important to have both. And actually, and I personally believe that both are very complementary. And I think also personally that the ecosystem as a whole needs VCs with deep pockets, but the ecosystem also needs strong CVC teams. Everything we are doing also is to help ultimately the startups to develop. So I think it's useful for the group, for the ecosystem. So it's really to find its own way, own path. For us, it was a step by step. Some corporates might see the things differently, but at the very least, the mandate should be very clear. Because otherwise, there are so many different possibilities. It's hard to navigate. So that clearly for me is the very important point. The second point is clearly to have a strong internal support. We are corporates. It's always important to have strong sponsors. For us, our main sponsor is a member of the COMEX and who is also the chief digital officer of the group. And he was part of the funding team when we launched the corporate venture. And we now have the 11 activities also from the members of the LP committee who are also helping us internally. But it's very key to have those connections internally. Otherwise, I think it will be much more complicated for us. And the last advice I would give is to act as investment professionals. If you want to be in this market, it's for real. That's my point of view, at least. So clearly, it's to respect the market standards. Even if you are a corporate venture, don't ask for specific provisions if you want to. Don't ask for example, for a specific rights to do M&A at some point in time. The markets really don't like it. This is just an example. Use the same advisor that the other as a VC does. So really follow the market practices. I think it's very important to act as professionals and be perceived as such.
Because ultimately, I mean, you built your reputation, and as you do build the reputation, you will encourage deal flow coming your way as well. So your basic points were: have a clear mandate, number one. Have a strong internal champion that flies the flag and has your back internally, and follow basically market standards and follow market practices.
Exactly.
Okay. All right. So thank you very much for your time. Maybe a final question on ecosystems or startup ecosystems in general in Europe. Obviously, with a very large, strong European parent based in France. Do you? What's your view on the European startup ecosystem?
Well, the 2020 obviously has been a challenging year. But if you look at what happened in terms of the VC market, I mean, it's been quite incredible, the resilience. Startups or the funding is still coming, even in bigger amount than before. So you know, clearly it's still a hot topic. But in terms maybe of the deal flow, one of the things we are seeing is more and more now green tech companies. We see the emergence since the Corona crisis of new startups in this field. And actually for us, for the SNCF group, is very important. You know, ESG is a key concern for us. So we are now adding, you know, we are looking clearly at mobility startups, startups in the mobility sector, and also in the industry 4.0. But we are now also more and more looking at startup in this field as well.
Well, I'll be sure to send you some of my students that may be interested in exploring opportunities in this sector. So thank you very much. Lucas Rudolf, who is the head of investment for the SNCF's CVC 574 Invest. Thank you very much.
Thank you, Claudia.